Hello and welcome. We are going to be talking about a sub 2,000 crore market cap company today with a 5,200 crore order book on a 14 to 15% margin. Order book to be executed over the next couple of years. Really, that's the aspiration that Vikran Engineering has. That's the 1 month chart, of course, negative 9%. But essentially, what's more important to really look at is from the highs from the 52-week highs. It listed in 2025, and therefore it's 40% down from the 52-week high that the company has done. It trades at a substantial discount in terms of the earnings multiple from the listing point till now. It used to trade post money during listing or rather just after listing at around 32 times. Now trades substantially lower. In fact, pre-IPO, the price to earnings multiple was also 23 times. It trades at a 20% discount even to that on a trailing 12-month basis. That's one of the reasons why it's looking interesting. Second is presence in the solar EPC space. That's obviously a fast evolving sector and a sector where there is deep interest at this point of time. Strong order book as well to back that up for it. Now, let's take a bit of a step back, try and understand the company. It was incorporated in 2008, listed in September 2025. It's basically an EPC solutions provider for infra within power, water, railway and solar. Now, railway is a slightly smaller component. Solar, larger power and water is the predominant force behind the order book of Vikran Engineering. It's promoted by the Marketkar family, and we'll have Rakesh Marketkar, who's the chairman managing director, joining us a few minutes from now once we're done with this. The market cap is around 1,800 crore. I did speak about that. In terms of products, it does a whole host of products within that power value chain. I'll quickly take you through some of them. It does transmission lines, for example, which is carrying bulk electricity along for long distances between substations. That's one of its core services and products that it offers. Outdoor switch yards for controlling high voltage power flows. Mind you, high voltage is the current segment which all of the power ecosystem is trying to target because of the better margins in that segment. Then there's gas insulated substations, which are compact indoor substations used for insulating gas. You've got smart metering, you've got distribution networks, which is poles, wires, transformers, which help delivery of power to users. You've got water treatment projects, plants which make raw water safe for drinking. So they've got that as well as part of the plethora of products that they offer. Multi-village schemes, which is shared water systems for several rural settlements. That's something that they focus on as well. Railway electrification, overhead electrification lines within the railway segment. You've got traction substations, which are step-down substations feeding power to railways. You've got underground cabling, which is high voltage lines which are buried underground. Now, this can only be done when it's high voltage, and therefore this is another niche which they have. You've got ground solar plants, utility scale fields of solar panels, and then there's data center infrastructure also that they are working on. Obviously, all of this on an EPC basis is what they play. In terms of the order book, it's around 5,200 crore strong. You got 54% of that being in the solar space, which was virtually nil at the end of FY25. You've got thereafter power transmission, which is 33%. Water is now just 12%, very small. And then there's others, including railway, which is just about 1% currently. Between private, government, PSU, this is really the split. Private is 51%, government 31%, PSU 17%. And therefore, it's 51-49 broadly between government, PSU, and then there's private, which is 51. Book is, even state-wise, is decently well diversified. Top 5 states is approximately 74%. Top 4 states is approximately 74%. And the balance is 26% is other states. Geography, it has a presence in 22 states, 190 locations. The business model, let me try and explain this, and this is where the crux lies. It wins long duration contracts, right? Designs projects, procures material, hires subcontractors, and manages the entire construction value chain, engineering, obviously, as well as all the way till construction, right? and thereafter it bills clients based on milestone and work completed. So that billing happens on an incremental basis every year. It uses the asset-light approach. Very important to understand. It leases equipment, doesn't have its own equipment, leases heavy construction equipment, and therefore optimizes the levers that it has to ensure that it leases only when required. Second, but it has to lease based on the current price. The bid obviously goes earlier. That could be one risk. It relies on large vendor network and parallel project teams which work together. And they've also acquired NOPL Solar, which is Onyx, within the solar power ecosystem, which is helping it scale solar. So that's broadly the way in which this is structured. Now let's talk about the financial metrics of this one. And to start off with, I'll come to management guidance in just a bit, but let's start with the financials first. In terms of the revenue, you've seen a very strong growth, 34% growth. There's a thumbs up out there. So you've seen very strong growth on the revenue count. EBITDA also 30% growth. PAT also has seen 30% growth. So you've seen a very decent growth, but FY23 was a low base. Thereafter, the growth has been sharp. When you're looking at the margin trajectory, it's been choppy from 15 to 17 back to 14. That is the one thing we're cautious about. The guidance currently is they'll operate in a 14 to 15% band. Going back to 17 looks difficult for the moment as per management commentary. So hence, we've given that cautious neutral view with regard to the margins. Let's talk a little bit about the order book, and here is where the robustness reflects. It used to trade at around 2 times book to bill, right? So 2,000 crore order book and sub 1,000 crore revenue, that has ballooned to now 4.2 times. But given this, there'll be a very sharp growth spurt if at all management guidance is followed. And in that case, of course, this will come down equally sharply. So the guidance is extremely strong for FY27. We'll come to that. Let me talk about the balance sheet now. In terms of the balance sheet, you've had an equity raise, an IPO, which has come through in FY26. As a result of that, the book value currently stands at around 1,238. So it's at around 1.5 times. Market cap to book, and that's something you want to keep in mind. Also, you've got cash balance of around 220 crore, debt of around 290 crore, and therefore balance sheet otherwise looks clean. The only worry is the large receivable component, inventory build up, but that's all. Some of that is part of the nature of the business for Vikrant. The question really is how quickly can receivables unwind and get converted to cash. That is the one of the pain points, and some of those receivables are in the water segment, and that's why the balance sheet is a little bit loaded in comparison. So that's broadly on the balance sheet. In terms of the cash flow, there's negative cash flow because of the build-up that we just spoke about, understandably so, but as a result of that, given the negative cash flow for all 3 of the last years, there is a concern. You want to be careful with regard to this one. What they're saying is they'll continue to invest even in FY27 with regard to growth. Cash flow unwind will likely happen in FY28. So maybe FY27, FY28, keep an eye out on this trigger. This is an important trigger to keep your eye out on. Cash flow is a thumbs down, by the way, viewers. If we can change that, that'll help. When you're looking at return ratios have come off sharply, but they continue to hold above the 15% mark. And therefore, there's some bit of comfort with regard to that. But from 36% to come down to 17% is certainly a concern. Keep your eye out on return ratios nonetheless. For the moment, holding above the 15% mark. Likely with the growth coming your way in FY27, you could see an unwind on this, and you could start see an increase with regard to ROCE as well. But you want to keep your eye out on cash flow equally well, because with that profitability, cash must come through as well. So all of those as factors need to be kept in mind. Shareholding pattern, 56% promoter owned, no concerns there. FIs have reduced their shareholding. At the time of listing, maybe September 2025, it was 2+%, currently at 1%. DI is at 7%. Public holds 36%. So that's really the texture. In terms of management guidance, you're looking at FY27 revenue to be at 2,200 crore, from 1,250 to 2,200. margins of around 14 to 15%. I spoke about this. FY27 and 26 to be growth or investment years is what management has guided. Operating cash flow positive from FY28. I wonder if that gets pulled back to FY27. And they do not require any additional equity. So no additional equity dilution expected. I wonder what happens on the debt side of things. That might also impact ROC. You want to keep your eye out on that. Valuations. Pre-IPO was trading at 23 times. I spoke about this. Post-IPO at 32 times. Currently trades at sub 20 times, maybe 19 odd times. You're looking at FY27 revenue of 2,200 crore. This is math that we've done. Margins at 14%, right? Leads you to around 300 crore of EBITDA, 65 crore of depreciation and interest, if at all we factor that in. And then you arrive at a PAT of approximately 180 crore, roughly. If this plays out, then you're trading at 10 times FY27 if this plays out, of course. That's the big, tall ask. And we will quiz management as to whether they're able to pull this together or not. Let me, in fact, bring on board Rakesh Markhetkar, who is the Chairman Managing Director of Vikran Engineering. Great having you here, Rakesh. Let me start off with what West Asia is doing to the sector as a whole and to you in particular. What's the kind of headwind you're seeing? One, with regard to commodity costs, is there a pass-through there for you? Or will you have to take that or absorb that into your margin? Give us a sense.
So first of all, good afternoon, Harsha. And thanks a lot for inviting us for this very prestigious show. So to start with, regarding this West Asia crisis, since we have over 100% operation is domestic, and as far as the aluminum and copper is concerned, we already passed through, and whatever our costing is done, that is well done in well advance. And today we are hardly impacted due to this. And absolutely, we have done our, again, redone our exercise for the profitability for FY27 for the current project. Everything is well within the control. So it is not at all impacting in short. So this is what about this. And I just wanted to have some correction in that the figures you have shown it. Our unexecuted order book today, we have around 5,700 crore plus this order book. And this is very well placed. And apart from this, we are already in a very execution mode. And I am very glad to share that the very prestigious project of PowerGrid 400 kV Badla substation, as we always do, we have closed 3 months ahead of the schedule and this month itself. So I'm starting with a very, as the Vikran is known for the execution ahead of the schedule completion. Prior to this, we have given 3 major substations for the PowerGrid of 765 kV and 2 400 kV Kurnool, Raipur and Pavagada. They were also ahead of the schedule. So we are execution company. We are completely focusing on our execution, and that is continuously strengthening our execution.
I get your point. We get your point, Rakesh, and fully appreciate that. The 5,700 crore order book, my understanding is based on orders which have accrued to you in April, May and June, of course.
Yeah.
And the numbers we've shown is basis FY26. So that quick correction.
Yes.
FY26, your order book stood at 5,200 crore, and because I've taken FY26 revenue, I've had to do a book to build there. So broadly, that's the take. But appreciate 5,700 crore being the order book currently. Let me quickly ask you with regard to the business model. You lease your assets. Has the leasing costs gone up in the system, or that has largely been stable over the last 2 to 3 months, given everything that's playing out in West Asia and the impact of that on India?
See, the leasing cost is absolutely not gone up. This is the good news. And then we stick to our light asset model, and right from the very beginning, wherever it is a lease of equipment is needed for 2 months, 3 months, very precisely we book those the equipments, and then well in advance, and then the pricing is done correctly, so it is not impacting at all.
So no impact on pricing. With regard to execution, you spoke about that. You've seen very strong execution already. Q1 is what you were suggesting. talk to us about the full year revenue. How will that look like? Will it be in around the 2,200 crore number which you've guided for, or will it be short of that? What will be the levers what are the projects that are going to get completed which will result in that revenue recognition?
So out of this 5,700 crore revenue, and this has to be more than, see, around 3,000 crore has to be executed in the next 15 months minimum. So we are for sure, based on our execution plan and that already the progress at site. So we will be slightly improving our projections, and our top line will be around 2,200 to 2,500 for sure. This is because of two reasons. And very important is that acquisition of what we call it NOPL solar project, 4,200 crore projects, 969 megawatt, where we have started very fast execution. We have started commissioning as well. We have commissioned 20 megawatt and around 100 megawatt. We are in very advanced stage of completion. So all this momentum, and with the existing momentum our T&D projects. So we are very sure about our the guidelines what we are given for the FY27. We'll be crossing that, and that will be 2,200 plus for sure, between 2,200 to 2,500. And since I told you that the profitability and the pass on is absolutely no issue, so we'll be able to maintain that the profitability what we have projected on EBIT margin around 15. Slight play 15 plus.
Understood. With regard to NOPL, how much of the revenue of 2,200 to 2,500 crore will come from that in particular? Can you give us some color on that?
Yeah. So this around 16 to 1,500 to 1,800 crore will come alone from this project. And this is the very positive. I just wanted to highlight some more things about this project. This is the first time the Vikran has gone to, apart from the EPC, to the developer mode, with a very distinct advantage of this project. First of all, this is the giving us 25-year clear PPA with MS-EDCL, and then that very excellent tariff of 3.074 per unit. And this is having the potential of around 525 crore every year average annual revenue, and 450 crore plus EBIT margin every year. And this is going to create an asset of 2,700 crores. So this is a major milestone for our Vikrant's progress. And then whatever the concern you raised for the negative cash flow for the last fiscal, and this is what it is going to help us in the two-way. Apart from this, because here we will be executing EPC of this project. So depending on the government and other organization where there is a fair chances of slippage of our the collections, so everything will be in our control now in this case, and the 60 to 70% minimum revenue coming from this major projects. So we are very confident. Apart from this, I just wanted to highlight the major concern is coming on the negative cash flow. Before you ask, let me clarify that in advance itself. So this negative cash flow, though we have guided for FY28, but we are very sure the way we are progressing, the way we are executing the things in line to collect our receivables and the contract asset, the working and certification of that. We are very sure by end of FY27 itself, the probability of there, but 80% probability is there that we may come in the very positive, the cash flow in FY27 itself.
Excellent. Okay, let me unpack everything you've just said. Let me try to unpack it at least. So you're telling me that out of the 2,500 crore of top line that you will likely do in FY27, around how much of that comes from NOPL, sir? If you can give us that perspective first.
So the NOPL, as I explained you, that though we have budgeted minimum 600 megawatt, around 1,800 crore, but the internal targets are much better than that. But as we talk outside, we very conservatively we talk. So this is what I'm speaking about that.
Understood. So 1,700 crore will come from NOPL alone. And then you're saying on top of that, you'll have a 500 crore annualized revenue. When does
Right.
that kick in for you?
So, see, this will be executed over the Q1, Q2, Q3, Q4, and all, because this time we have a very strong order book, and the balancing will be the quarters will be there. So, this is what, apart from this, our regular T&D, the project, they are also in the momentum. So, we have done a detailed programming project-wise, month to month and quarter to quarter, and we will stick to that.
And out of your order book, around 2,400 to 2,500 crore is solar EPC. How much of that is coming from NOPL? Pretty much everything?
So again, approximately, see, we have the solar portfolio around 1.5 gigawatt. Out of this, 969 megawatt is from NOPL. Then another 500 megawatt from NTPC. So that there is a delay in 2-3 months from the government side, because that land issue is still. But we are hopeful, though we are not counting much. Around 250 to 300 crore will come from that project alone. So, but that other projects like Madhya Pradesh, we got another developer mode project of 45 megawatt. So we will be completing that also in this financial year. It is around 160 crore. So NOPL is roughly, that is contributing to 60%. I'm just correcting my figures.
Understood. And with regard to the acquisition of NOPL, how have you done it? Because it's a large acquisition for you. How have you paid the proceeds? How much of it is paid? How much of it is pending? Where does the cash flow come from? Give us a sense of that.
So it's a very strong, good question. See, actually, having learned the lesson from the receivables from the previously projects from government, the way, though the money is coming like the water, though we have a very little portfolio of 10% only, but there was a slow clearance of the collection, so we were worried. So that our strategy was to shift towards the private, and to maintain our profitability, and to create the asset. We have gone through this. So we already invested 100 from our accruals, 450 crores in this project so far. And though we are very close to the financial closure, the financial closure is done, but we are still trying to improve that the terms and condition better. So everything is done. 100% shares are on our Vikrant's name now. And we are very strongly going for the execution of this project.
How much of debt do you still need to take up for the purpose of financing this project? If at all you're going to be taking up debt, if it's going to be internal accruals, you're going to use how much of capex still in the pipeline?
See, we around that loan what we got it sanctioned is around 2,800 crore in the debt form. So, but that will be the over a period of, as soon as this is commenced with our commissioning and execution. So that will be get consumed in over 15 months from now.
So your debt will go up from the current 300 crore. Your debt will go up to what amount and by what extent, and how much of revenue comes through as a result annualized, which is 550 crore approximately, goes 450 crore will be your EBITDA as a result. How much of that flows through to PAT? What is the financing arrangement you have? Rate of financing?
So,
give us a sense.
So rate of finance is approximately 9%. Approximately this. We, as I said, from 9.1, we are negotiating to under 9. So this is one. And as you very rightly said, that with this, we will be getting 85 to 88% EBITDA margin every year from this. So this is what I say, this is the game changer of the Vikran, and then this is what in our entire focus is on that asset creation and execution of this project.
This asset alone brings you around 150 crore of profitability starting FY28. Is that the right way to think of this? And this will basically push your debt up from the current sub 300 crore to 3,000 crore. Is that the right way to think of it? Give us a sense.
So, correct. Coming to the debt will increase for this moment for this financial year. But since this is what one more important things, we are now month to month, we are commissioning and then we are starting revenue as well. So we will be started paying that regularly, the debt also on a month to month basis. For example, we have commissioned 20 megawatt and another, say 100 megawatt, we will be closing by end of June. So this 100 megawatt revenue generation, this also that we will start paying the debt and then acquiring the, earning the revenues.
With regard to cash flow, do you do free cash flow, operating free cash flow in the current year? And if so, how much as per your estimates? 2,500 crore on top line, 15% margin. That should see a very sharp surge in overall bottom line. What should it do to your cash flow? And any possible defaults that you're estimating? You did 20 crore of write-off last year. Any defaults in the book?
We are not expecting any default. And in fact, whatever we have, that was the provision we have taken of 20 crores because of the prudent accounting standard that there was a delay from the Jal Jeevan Mission, the water projects collection. Though we have started now, we have started very regularly the Jal Jeevan Mission, the collection from the government. But as a prudent accounting practice, we have given the provision of that 20 crore. But for sure, that is going to come back in this financial year. And this is the precisely reason why the dip in the 2%, the margin in the previous financial year.
Okay. Rakesh, great speaking with you. Thank you so much for coming in and contextualizing this with regard to Vikrant. Viewers, all the time we have on this edition of the show. Thanks so much for watching. Stay tuned here to ET Now. Plenty more to follow.